Okay, good morning, everyone. So today is the 7th, it's a Monday, 7th of January. So let's take things off by, let's look at what the DEX is doing. So I did some homework right here. Okay, so this structure looks to me, it looks pretty corrective. So I think this is the first wave up. This looks like a correction. So yeah, my thought is that there should be an upside on this. So it looks like this is a correction for now. However, I've also seen structures where it looks like a correction, and then it corrects and it breaks the low. So if that happens, right, that means this would be this. Sometimes it's all the correction. Sometimes it makes a running flat like that, but sometimes this doesn't happen at all, right? So if it does that, breaks the low. I will not be looking to trade the upside. Unless, of course, there's some kind of double bottom here, then RSI shows some kind of divergence, yeah? Meaning this will come down, there's some kind of divergence here and here. So this one goes down, this one goes up. But in any case, that's all I'm just speculating. What I would rather prefer is if this one actually comes down here, goes up, and breaks this low, right? I would rather see something sideways. I don't want to trade a move back to the trade two. I rather see something like this. This tells me that this sharp correction is all the correction. And then it's coming down 1, 2, 3 correction, and then 1, 2, 3 to the low some more. So because the reason I would prefer this is because there's more pips and more money to be made. As of right now, before any of that happens, right, the move that I'm looking for is actually the upside. This moves here that I'm drawing. So if I start to see something bullish, I'm looking for the buy, right? How far can the buy go? It can go pretty far. Could go up to here. It could pull back, right? But then it could continue up again. Or, yeah. So, as for now, I would prefer that this is not broken because this upside trade is the easier one to take. But easier does not mean that it will surely come true because this can also happen, right? And that will be the more difficult side to trade because, we would rather see a strong move be supported by another strong move here. First, second, and third wave. It's a little awkward to see a correction that's so sharp. And when you expect this to happen, and this don't happen, and it corrects this way, or even worse, it just goes like this down. Then a big correction here down like this. So it just does a 1, 2, 3. But then that's the worst kind of structure you could possibly do because it's just very few places we can actually enter in order to benefit from. So let's see what happens. For now, we're looking for this to happen. Okay, then you can look for the buy. Okay, that's a DEX. So that will be the strength. Okay, let's go look at euro dollar. So it looks like right now, because the DEX is kind of crawling down, so this is probably due to dollar movement. So it's crawling up slowly. As DEX is crawling down, right? So euro dollar slowly crawls up, and they all look good for one more down. Actually, if you look at this kind of structure, this kind of weird stuff here, pulls back, and it goes up again, and there's so many candles. It feels like a correction, right? So we prefer that this one goes up here. Some kind of sometimes you can see divergence up here. That would be the best. Sometimes you don't. Sometimes you don't. You divergence the double top, you can sell it. Exit, pull back, you can sell it again. All right. Sometimes, of course, it just falls right through. That's also possible, but it's important to just trade a strategy without mixing too many other strategies. Otherwise, it can get a little bit confusing. So I would say if I'm looking for the sell, it would be at the top here. The 8.6 here. I like the sell. Come to this low here. Just break this. I'll surely exit. Because why? If it comes, consolidate, sell again, then just take profit along the way. But this move down here, man, after it comes here, anything can happen. It could correct back up and then drop again, and you don't want to give back all the profit. Imagine you're up. If you're up, say, $10,000, $15,000 profit, and you get back all for $500, you got stopped up for $500. That'd be terrible, right? So I would recommend, if you're trading big lots, is to take the profit and go. Look to re-enter later. Some people have smaller accounts, say around 5,000, or let's say you have 10,000, right? I would suggest having a mindset of big lot trading, because when trading small and trading large, the psychology is quite different. Okay, person might succeed at turning 10K to 20K in maybe a year or 6 months, but when you try to do the same on a 100K account or $1 million account, you're going to see and feel different things. Surviving a drawdown of $500 is different from surviving a drawdown of 5,000 or 50,000. You might be able to survive a drawdown of 1,000, but can you survive a drawdown of 10,000? Even though they're both 2% of your account, right? Because 1,000 doesn't really make an impact on your life, but $10,000, that changes lives, right? So yeah. Okay, so I would suggest my suggestion is, when it comes down here, this I'm saying is to exit and then look to re-enter later. Of course, assuming that this actually does come down, but that's what it looks like for now. So once consolidate here, I think it's a good sell now. Right. If it's wrong, if this stop is broken, then we'll just have to rethink later. If let's say it just crawls out here, breaks, and then sell, and then here, then maybe it's upside. That means it's going upside now. But as for now, yeah, if it breaks here, this is the easier move. The easier move to take. The harder move is that it breaks this top, breaks the top. Then you could do this, or you could do this, right? Then from here you have to figure out what's going on. You could do this, then this means upside. Otherwise, this one could just, there's so many things you could react here, consolidate, then it drops again. So we just have to take it one step at a time, one piece at a time. So as of right now, if I'm looking at this, stuff like this. So you're thinking it's going to reach here. So if you hit this low here, any zones of buy, it's good. It's a good place to buy. But you buy, you don't try to keep it for that, because you could pull back. That's what corrective structures do. They always pull back. They keep coming back against you. So just take the profit and go. If you bought because of demand and supply, then just take it, close the trade. Comes back again, or maybe even below here, buy, close the trade. This one you buy, you keep. If you sell here, keep it here. Come here, you could do that. Then you can, structure is still the same, right? So that's the hope for it, downside. Okay, let's quickly move on to pound dollar. I'm going to be doing euro dollar, pound dollar yen, and dollar CAD. If I have time, maybe I touch on gold. Okay, so let's look at pound dollar very quickly. Pretty much the same. So like same as euro dollar. You're looking for the one while it's sharp, sideways, consolidate here. It comes here. If it does this, it's even better. That means you can sell it. Small flag here. What do you mean by a small flag? Let's say a small consolidation of this can be around, let's say from here to here. If it's about 30 pips, I would say about 30 pips, and even if it touches the trade to like so 30 pips and it breaks, you can sell it again. That's my definition of what a continuation pattern would be like. All right, so it does a flag, it touches the trade too. It's about 30 to 40 pips. If it breaks, you sell, right? You don't sell it, don't put a sell limit, put a sell stop. That's much better, right? The reason for that is, of course, because if it's wrong, let's say it comes here like this, it broke. So for some reason, it goes back up like here. This is your risk. You stopped out right there, right? Because if it's a multi-way, generally it should not go back. You see, it's something like this. When it goes, it should not come back up again. If it's it's supposed to keep going in one direction, basically. Yeah, that's the idea. Okay. Dollar yen. Dollar yen looks up. I must say, this looks upside to me. It's giving a pullback right now. So the reason why I drew this line here much earlier on is because at that point in time it was up here. I woke up this morning, find it coming down. This looks like a running flat. I think it's doing running flat. I think we're in a third wave here. So this 1, 2. This is a third wave, and this is the third wave. It's a 1, 2, and this is a third wave as well. 1, 2, 3, 1, 2, 3 as well. Right? It's a 1, 2, 3 within the within this 1, 2, 3. All right. So sells like this, you cannot sell it here. Best you sell it on the break at the top. Then your stop will be here. Okay, so this stuff here makes me feel uncomfortable. I have to say that this makes me feel uncomfortable because you get, sometimes you just get a reaction right there. It might as he gets there, it might pull back before it goes again. That stuff can happen. So you just have to. It's a call you have to make whether or not you want to take the buy. I hope that it pierces right through. Sometimes these zones they don't hold. All right. You ask me, I would not want to be selling this zone here just off a bounce. I would not do that. It could bounce 6 pips, 10 pips, but this is a potential third wave going up, and I don't like to sell against third waves. I don't like to sell against. It's not a good idea. Okay, so I'd rather take the buy on this break. Over here, I decide what to do. Maybe set the break even or take off some. Okay, if it pierces through immediately, that's even better. All right. Okay, next one would be dollar cat. Dollar cat. Oh, this is I have very long term. I think it's down. To me, long term is downside now. So if you get this right, you can buy a condominium. But okay, so this cannot break basically. Okay, so you're looking for the downside. Of course, the forecast is one thing, but the execution you must always be prepared for that. This could happen. It could happen here. It could happen much lower down, but it could always happen. So you enter the top, you're looking to keep it all the way down. You scale in, you're hoping for that. Either could happen. All right. So you enter the top, basically, price action can't go above this previous high. You don't want to see that happen. Can it happen? Yes, it can. Yes, it can. It could pull back. Then it goes up again, and then you get something like this, and then it starts to drop. That is possible too, but that's not what we hope to see, basically. Because if this was to drop strong, right, this would be a 1, 2. This would be a third wave down, like so. So that's what we hope to see. Okay, let's go look at gold, huh? You just finish off very quickly with gold. Gold did do a pullback. I was looking at the moving average. Very strong trend. So we're now on a 1 hour. So very strong trend pullback. Now, gold at this point has become tricky. It's at a tricky place, you see. Now, the thing about gold is that when you start to trend, stuff like RSI, sometimes it's useful, sometimes it's not, but I will be quite cautious at these levels. It's gone up pretty high already, and if you look at the daily chart, right, it's possible that this is the first, this is the second, this is the third. Yes, that is possible, but you have to realize that look at how much nasty stuff happened before it actually got up there. So if you got a buy, let's say you got a buy here, well, nasty stuff could happen before it actually goes. So that fear is there. I would say that fear is there for me. This is potentially a. So anything could happen. Anything could happen here. If I was trading this, and I am, I would just what I would do is I would simply take a buy somewhere along this line, which I did. All right, and your stop loss would be some average true range where it cannot cross a certain amount from this low. So right now I'm in profit basically. But it was not because of any real true wave count, because the wave counts can keep changing, especially when it's a third wave. And if you look at these kind of structures, it's just crawling up. It's just crawling up very, very slowly. And when it's structures like that, it's almost impossible to try to count it, 1, 2, 3, 4, 5, because you can count the bigger moves, but this move itself, when people start to see divergence like that, they keep thinking it's ending, but it doesn't end. It just crawls, and then before you know it crawls all the way up to maybe 13.82. Let's go look at the daily. So the previous high to 13.73. Could this be the move? I wonder. Let me see. 3. This could be the move. This could very well be the move. This could be something like this. And now this move is now heading upwards. 1, 2, 3, like this. This is the move. The question is there going to be any crazy pullbacks that are going to make life difficult? This could come at any time, right? Up here. So there are a lot of ways you could play. So if I was to play this, because if I was to take entry right here, the entry is not optimal, right? It's not optimal. If the entry was somewhere here, well, you have so much structure to protect your trade. So if I took the buy here, anywhere here, I'll just break out a little bit, or even up to here, if I see anything that spooks me, I'll surely get out. So this thing here is just to remind me that you could always do a 1, 2, 3, 4, 5. That's always possible, or you just do a fugly like this, the up as well, or you could just do like this and then up as well. So a lot of these things could happen, right? But generally for me, at golf is upside, strong trend, right? I will just take bits and pieces along the way. So basically, let's say I was trading this like so, took the buy, around here I would exit. It pulled back here to this moving average. Stop loss will be around here. Around here, I will exit again. So I'll just take bits and pieces as it's moving up, right? Because the slow crawl, especially trading big lots, is quite. The longer we stay the trade with big lots, the more we want to take it off, right? Because you're afraid that it will not go. Of course, if it's only like 10, 20 bucks, you probably could take $20 profit, keep it till forever. But when the lots are great, are big, you start to feel the fear factor, regardless of how big the account is, right? So, okay, so I guess that's all I want to say for today. Let's see how things work out. All right, I'll stop sharing now.